I'd like to show you why knowing your why is the start of your journey. Without a strong why, it can be so difficult to reach your maximum potential. My name is Dr. Jason Balara, and every week I meet with real estate investors and mindset specialists that are taking action in order to build a life according to their own terms. We will break down what drives successful people and allows them to achieve at such a high level. If you are a professional wanting to break through, or simply someone that wants to hear an inspiring story, the Know Your Why podcast is made for you. Hi everyone, I'm Jason Balara and this is the Know Your Why podcast. Today I'm here with David Toupin. David is a multifamily real estate investor and entrepreneur based in Austin, Texas. He started at age 20, which I think is pretty amazing, and I'm actually going to let David tell you his story. But first of all, David, thanks for coming on the podcast today. I really appreciate it.
Yeah, thanks, man. Appreciate you having me on.
Yeah, absolutely. So obviously you started at a young age, but why don't you just give us a little bit about your background and your story and kind of tell us what got you started and give us a little bit of your journey.
Yeah, I grew up outside of Detroit, Michigan, in the suburbs, and I was an entrepreneur from a very young age. I started my first business when I was 13 as a landscaping company. And so, naturally I got into college. I wanted to get into business somehow. I did some time in investment banking, consulting, did some internships, and just didn't love, I learned a lot from it, but I didn't love the corporate environment. I wanted to still run my own business. And so started kind of exploring, networking with people, and I found real estate. And then obviously, Rich Dad, Poor Dad, and you kind of get in that whole rabbit hole. You start figuring out where do I fit in this real estate puzzle? Because there's so many ways you can do it, from wholesaling to flipping to triple net, whatever it is. So I kind of landed on apartments, and, for me, it was like tunnel vision at that point. I just ended up going all in. And my whole goal was, how do I go and find a good deal to buy? And I'll figure the rest out later. So I got actually two 12 units. I was just making so many offers. I got two 12 units under contract in 2016 from two different brokers, but the properties were on the same street, which was kind of cool. And so I ended up, had never raised money before or bought any property. So never syndicated. And this is like I said, in 2016, 2017, back when syndication wasn't, there weren't a bunch of courses out yet about it and all that stuff. So it was kind of like school of hard knocks. And I just got in there and figured out, hey, this is how you raise money. And this is how you put a syndication together. This is what a PPM is. It's just learning kind of by doing. So that was my first deal. Fast forward to today. I moved to Austin, Texas 3 years ago, moved the company down here. I've bought a little over 1,200 apartments, commercial properties, some industrial, have done some ground up developments as well. And I own a software company as well. So.
Awesome. That's a lot in a short period of time. When you were the 12 units in Detroit, or had you come to Austin by then? Did you? Those
were in Michigan. Yeah. Okay. Yeah. Not quite in Detroit, but they were in the suburbs.
Gotcha. Yeah. Gotcha. And because I've heard you on other podcast stuff, you moved to essentially house hack one of your apartment complexes, right? Is that correct?
I did. That was still in Michigan. Okay. I moved into it as a 96 unit, and I had syndicated. It was the hardest capital raise to date. Still, it was the hardest just because it was so fresh. I was so new, and it was 1.7 million I had to raise. But I moved into it. I hired maintenance person, on-site manager. I had, the manager quit. I was leasing units. Maintenance guy was a drunk, had to fire him. I was doing maintenance. I had to hire new people. I went through everything on that deal. So it was kind of cool though. Cause I literally got to be in every single position in the totem pole, and got to see what it takes to hire the right kind of leasing agents and how the accounting works and setting up property management softwares and all that stuff. So it was fun.
Yeah. Yeah. I mean, I'm sure it really is. It's got to be a kind of a great learning experience right in the beginning too, where it's here you are, you're doing all of those parts. Now, on that property and future properties, what works well, kind of able to really implement that, and being on site, I'm sure made that
you're not trying to manage this from a distance and be the leasing agent and maintenance guy and all of that. So
exactly.
That's pretty cool. What did you mentioned that first capital raise was to date the hardest one. And I think that's probably generally true, right? People's first capital raise is going to be the hardest one because nobody knows you in that space. What challenges did you encounter, and then how did you overcome them?
Yeah, well, my first were a little smaller on those 12 units. I think I raised just under 200 grand for each of those. And that was tough in itself as well. I was just going to meetups, networking. Anyone that I thought had money and the ability to invest, I would hit them up. If they said no, I'd ask them for a referral. And so, I kind of got put through the ringer on that, and having no track record, it made it very difficult to convince people, to invest with me. I'm young. I was 20 years old, no track record, never done it before. Why should you trust me with your capital? And so I ended up finding a couple small business owners, local people who flipped houses, but were, fairly successful, and they flipped houses kind of on the side or stuff like that, right? Other people kind of in the real estate space already and wanted to diversify into a syndication. But the toughest one was on that 96 unit. I talked to hundreds of people to get, I think 25 people to say yes. I tracked every conversation. I think I had 300 or 400 conversations. Wow. And it just said, 10% of them, to get less than 10% of them to say yes. But the biggest thing that I learned was what you do and how you pack. There's two things. How you package the deal is extremely important. I started off pitching that deal with a Dropbox link that had photos and underwriting and a Word doc with a summary of my business plan. I don't know, I guess it was just being caught up in the weeds, and never thought to put together a pitch deck. Right. And so, right. And like I said, there weren't courses about this stuff at the time. And so once I switched up halfway through capital raising, I was getting 2% of people to invest of the conversations I had. And then after that, I was getting I put a pitch deck together, kind of upped it to 10 to 20%. So that's the first thing. And then the second thing is you can't hard sell people on investing. You can, it's just not going to work very well. Right. So when I switched up from trying to hard sell people to more just presenting an opportunity and letting them make a decision, that really helped a lot as well, because it turns people off when you try to hard sell them. And so, it was great though. I mean, I did everything wrong so that I could learn what's right.
Yeah. So, and those are probably, some of the best lessons too. And the Dropbox example is a perfect thing. It's when you're starting out, I would think the thought process behind that is here's all of the information, but the reality is that most of the people that are going to invest with you, until you get to that point of high net worth individuals and family offices and all, they don't know. They just want to know you, right? They don't want to know. They don't know anything about all of the math and all the business plan stuff. They're just they want to know probably what their returns can expect to be, and they want to know, like, and trust you. So it's that pitch deck, figuring out what goes in there, is I actually think of another really good point that, I don't know, you don't hear a lot of people talking about what the right things to put in a pitch deck are and stuff. Even now that there are courses, it's you should make a pitch deck.
Yeah, you should.
Right.
And there's only four things people want, right? They want to know, the location of the deal, right? Some people want to invest in certain markets. They want to see a picture of it so they know it's real. They want to see what can they anticipate their investment to turn into. All right, I put 100K in. What's it going to return? And then they want to be able to trust you. And as long as they get those four things, in my experience, most people really don't care. Honestly, I have dozens of investors nowadays that have done, between 5 to 10 deals with me. And I just text them and I say, hey, I've got another one. And they say, where do I wire the funds at this point? Right. They don't even need to see it. So it changes, but you definitely need something that's simple, easy to understand, and something that somebody can make a quick decision off of. If they have to comb through a bunch of documents, they're just not going to do it.
Yeah.
You know?
Yeah. It's too much. I mean, I had one investor at one point said, I sent him we did the webinar and I sent him the webinar recording and he was like, just send me a PowerPoint. I don't want to watch.
Yeah. I don't want to watch
that. He's like, there's like 3 slides I care about. Like, don't send me. I'm like, okay, fair enough.
That's hilarious.
And it's just every investor might be a little bit different too. So you cater what you present to them with. And then when you've got, the track record that you do, then it becomes a lot easier where it's truly like, hey, I have another deal. where do I wire the funds? Like that's a exactly. Phenomenal position to be in. So you kind of, obviously, you've scaled up and you've done development as well at this point.
Yep. Yeah, I've done one development, and then I've got 2 more in the works, self-storage properties, and then I've done 1 apartment ground up.
Okay. We actually haven't had a lot of people on here that have done development. What are the differences that you find there? When you do the typical apartment syndication, even value add, it's an existing bit structure. People can see it, they can see those pictures, and then okay, here's what I'm going to do to make it better. How does that look different for you as the sponsor, but also like as you're talking to your investors about it?
Yeah. Well, I will say I'm certainly not the expert on it because I've only done 1, but I do know enough about it to be dangerous. Development comes down to a couple of things. Obviously, having the right piece of land in the right location and understanding what you can do with the land is really important. Knowing the land really either sets a property up for success or failure. Because you could buy a property that looks like it's great, 10 acres. Hey, this city allows for, high density, 25 units an acre. Okay, great. We can get 250 units on this property, but there happens to be a little tiny dry stream that runs through the front of it, and it cuts off any possibility of putting in, 2 entrances and exits, which is what's required in that city. You need a fire turnaround, all this, right? So there's these little things that you don't really know about when you get into it. And there's other places where, you can't build within 100 feet of any sort of waterway. So there's a lot of intricacies that come into play in development that you really need to be armed and understand and know about. And if you don't, you really need to have a good team behind you. I have a couple different civil engineers that I work with on our developments. And that's the first thing I do when I'm looking at a property or get something under contract is I'll send it to them and say, hey, take a look at this. Let me know if you see any hurdles or roadblocks, with the property. So that's one thing. And obviously things like utilities come into play. If you're building in an area where maybe they don't have water access or sewer access or electricity, so a lot of other costs. My development was a 50 unit ground up. We're almost done with it. But it took forever, in the middle of COVID. We bought lumber at the worst time. I mean, God, there's just all these hurdles that made me never want to do development again. But the project will actually still do really well. When we built it, we were projecting rents to be about $1,200, and now the comps are all at like $1,600 to $1,700. So the rents have really saved us and done well. But it is a different play. You're waiting a long time. I mean, syndication, I can buy a property, and I've flipped a 160 unit deal in 6 months. So, you can do those very quick, under a year for sure. But a development from start to finish, if you're buying land that's not entitled and zoned and fully planned out, you could take 2 to 3 years to get something from start to finish. And as syndicators, it's like, or real estate investors, that's a lot of time, so like, where are you earning on that deal? You're not making money until it starts cash flowing or until you build it and sell it, which is taking a long, long time. So I prefer to buy existing properties. Personally, I like finding value add type stuff. But I think for somebody who's really focused on development, I have some close friends who do a lot of it. That's their sole focus, and they have multiple developments going on. It makes sense because after some time, one development's going, another one just gets completed, another one's in the works. Like they have a pipeline at that point of, either fees coming in or properties they're buying and selling, and it makes sense for them. So maybe not for me so much, but it is a good business model for those who focus on it.
Yeah. Well, and I think that's a big part of real estate investing is like finding out what is your thing. You know what I mean? It's if you want to try development, you don't love it. Okay. You don't have to, because there's $1 million different avenues in real estate investing that you can participate in and make money and be successful and exactly. All of that. So it's a different, investor experience as well, right? Because as you mentioned, you're not going to cash flow until it's built. So, your investors, you're talking to them about giving you money for a couple of years, maybe, and then when they're going to get paid is really, on a refinance or a sale or some sort of capital event. So, it's a totally different, ball game. I get
exactly.
It. Speaking of a million different ways to be successful in real estate, let's talk about Real Estate Lab. So that's definitely, I think, outside the box that most people wouldn't expect, software development and things like that. So tell me about that. Tell us about, kind of how you got the idea, how you got started and got it through. Walk us through that process.
Yeah, I don't really have a tech background. So I'm surprised myself that I'm doing it. At this point, I would never have thought that several years ago. But when I first started in the business, I think one of my superpowers was underwriting and understanding the numbers. It made me feel really confident about the projects I was doing, which kind of, led to raising capital and just understanding the process. And so I built a spreadsheet early on. It evolved over time. I'd been on a lot of podcasts. I was talking about it on podcasts, the spreadsheet, and I put it up on my website. And within 12 months, I sold over $100,000 of a spreadsheet at like $250 a piece. And so to me, I'm like, man, there is a market for people who want, a good process or system or underwriting model to be able to use when they're buying apartments or other assets. Yeah. And so I took that model and I went to some pitch, kind of the idea to some third-party development companies. Ended up hiring a company 2 years ago. We started it and it was kind of slow at first, self-funded. And then I ended up raising some capital from friends and family. And now I've poured a bunch more in myself and we've really ramped it up. And we launched the beta earlier this year in January. And we're kind of looking to launch our full version of the software by the end of this year. So we haven't really pushed it. It's still like word of mouth, but we have a couple hundred users at this point. And what it is it's right now it's a multifamily acquisitions platform. And so our goal is to help you manage your pipeline of all your acquisitions. What deals are you looking at? Deals that you've kind of tossed out and maybe archived in the past. What deals have you made offers on? What are under contract? What deals have you purchased? So you can kind of manage your whole pipeline like a CRM. Within the software, you can fully underwrite deals. You can actually upload a rent roll and a T12 as long as it's in Excel. The software will read it. It'll pull out the unit mix. It'll pull out all the key information in the T12 and put it right into the financial model for you to try and minimize that time spent, looking through the T12 and rent roll. And so our goal is like, how do we auto-populate as much of a model as possible with some few inputs up front and uploading a rent roll in T12, and then let you kind of make some assumptions and tweak it. And then also bring in market data, right? We can auto-populate interest rates, operating expenses based on historical data in a certain area. So our goal eventually is to really help automate the underwriting process and make it really quick and easy for people to underwrite deals accurately.
Yeah, I mean, having all of that stuff, being able to upload the T12 and rent roll alone is a huge time saver. Yeah. You're not going through and manually sorting and placing in each
20, 30 minutes just doing that sometimes.
Right. Yeah. So if you can have that automatically happen, and then you have your market data automatically populating, I mean, that you really can. I mean, I would assume you've got to go in and make sure that all of the assumptions really fit with where you want them to be. But it's something that can save you a whole lot of time. And I'd imagine especially if your acquisitions are mainly in the same markets, for yourself, you can use a lot of those same assumptions and kind of recycle them, and it'll just make that whole process dramatically faster. So that sounds fantastic. So with something like this, I mean, I totally understand why you would have looked to kind of make your own underwriting model, because as someone who has used, I don't know, now 6 or 8 of them, tried 6 or 8 different kinds, it's like I'm at the point where I want to have, I'm not good enough with Excel, but like I'm at the point where I want to have someone make one for me that does exactly what I want.
Sure.
So I completely understand that. Now, you're at this moment, it's multifamily, but do you anticipate having it be able to run other asset types through there?
Yeah, by the end of this year, we're actually going to have multiple models in there for multifamily, self-storage, commercial, all the above. And you'll be able to upload your own model and link it into the system so that you can use whatever model you are used to or comfortable with. So we're making it pretty fluid and flexible so that, people like their own model, they could use that as well. If they like mine or the ones that we have built, they could use ours. So it's pretty cool. I think it's pretty neat. I'll have to show you a demo.
Yeah, that's amazing. Yeah. It's like I said, that time saver alone. And so the market data that's coming in, where are you getting that from? Are you using like a CoStar or Yardi or something like that and having that link to it? How do you manage that part?
Yeah, so the market data will be next year, but from all the T12s that we get, we aggregate that data on the back end. And based on location and size of property and asset class, we'll aggregate it, pull averages, and then we'll be able to auto-populate stuff like your operating expenses, contract services, repairs and maintenance. We'll just take aggregates from 75 other T12s that we've reviewed in your area, and we'll be able to provide that, those aggregates and averages into the model for you. It's not there yet, but next year that is one of our big focuses.
Oh, that's fantastic. Because if you're doing that, you're also going to be able to do it in a bit of a real-time scenario where if you're aggregating those T12s as they're coming in, those expense ratios might shift a little bit even within markets. Yep. And so if you're, your T12s are showing that, whatever it is, utilities are going up or any of that stuff, it'll give you, I would imagine it'll kind of keep up with that. So that's actually really pretty amazing. That's very cool. Yeah. I'd love to check it out. That's awesome. Well, David, let's shift gears a little bit, and I'll get to the part where I get to ask you all the questions that I ask each guest.
Sure.
And the first one is based on the name of the show being Know Your Why. So what is your why? What drives you and kind of pushes you towards these great levels of success?
Yeah, I think, obviously there's 2 parts of it. There's one is like financial freedom. I want to be able to live my life, my dream life, however I want to live it on my own terms. And so I think that's one of them. But the next thing is like for other people. I've always been a big giver, and I want to be able to really take care of my family, my friends, people around me. And I really like being involved in philanthropy as well and giving back. And so, I have some pretty crazy goals that I'd love to accomplish on that side of things. And I just want to I want to create a lot of wealth so I could be a big giver, because I get a lot of fulfillment from that.
Yeah. Being able to, once yourself and your family and friends are taken care of, it's kind of that impact on a really large scale is kind of, I've also have big, it's just amazing. When I really love when younger people are doing this stuff. Like I just like when I talk to younger people and I'm like trying to talk to them about investing, like you have the time to really expand and grow and impact. And it's just kind of the power of time and all of this is really pretty unbeatable, I think. So
Agreed.
Good for you. Second question is tell us something, I guess, about yourself that maybe isn't common knowledge, a special skill, a hobby, something that maybe lets people know you a little bit better.
Yeah, I'm training to be a pilot currently as a hobby. So I'm really excited about that. I ordered a plane earlier this year. It should come in early next year. So I'm stoked. Yeah.
Awesome. And this is not part of the normal questions, but I've had a couple of people like, what is that process to train to be a pilot?
So you have to get 40 flight hours. Most people do like 70 to 80, but you have to get minimum 40 flight hours. And then you have to pass a written exam with the 70% or higher. I'd say it's similar to like a state real estate exam type of deal. And then you have to do a final check ride, and you have to be able to fly a bunch of different types of maneuvers, different types of landings, takeoffs. And then you have to pass kind of a ground school, like an oral exam, which is that part is pretty intensive. So there's a lot of studying involved, but I mean,
Sure.
If you went hard, you could do it in a couple months, but I've been doing it for like a year and a half just because it's hard to get the time to do it all.
Right.
I should be done then the next month. So
fantastic. Well, you got to get done in time for your plane to show up. So you're going to take it for a ride. That's going to be amazing.
Yeah.
When people hear this and they want to reach out to you, what's the best way?
Yeah. Instagram at Real Estate Jedi. You can look me up on Facebook, LinkedIn, David Toupin. My websites are real estate website for the real estate company is toupinholdings.com, and my software company is realestatelab.com.
All right, we'll put all that in the show notes. Final question for you, David. What's a piece of advice you would give to someone who's getting started? They're looking to kind of do what you do and have that level of success, but how would you tell them to begin?
Go find a deal. I mean, you could read all the books in the world that you want, or, hire a coach or whatever, but they're not going to do the work for you. So get out there and figure out how to find a deal, because that's the start to everything in this business. You can't be an investor without a property to invest in.
Yeah, that's sounds simple, but that's a very valid point. You got to have something to invest in. So awesome. I really appreciate you coming on. I appreciate the time. I think you get a lot of interest on the software side of things. I think that's super. Like being able to do all of that and sort of automate. I mean, the amount of time that can save underwriters, especially, is going to be huge. So that's fantastic.
That's the goal, man. I appreciate you having me on.
Yeah, absolutely. Thank you very much. We will go ahead and sign in.
I'd like to show you why knowing your why is the start of your journey. Without a strong why, it can be so difficult to reach your maximum potential. My name is Dr. Jason Balara, and every week I meet with real estate investors and mindset specialists that are taking action in order to build a life according to their own terms. We will break down what drives successful people and allows them to achieve at such a high level. If you are a professional wanting to break through, or simply someone that wants to hear an inspiring story, the Know Your Why podcast is made for you.